Hey everyone, Tom Gentile. Welcome to the Patterns and Profits podcast. This is for week ending Friday, September 20th, 2024. And I'm sitting in here on a Wednesday evening having this conversation with you because the Fed just made its decision. We're going to talk about that. I've got other news I want to discuss with you as well. There's just a few big news pieces going on out there right now. We know what the big one is. I'll get to it in a moment. I want to talk about this week's news. I want to talk about 50 days to election and a segment I call I Ask Chat GPT. Okay, so let's start off with this piece of news. Amazon. Woke Amazon is finally waking up, and they are announcing a new policy mandating that corporate employees have to go back to work 5 days a week starting in January. So, wow, I didn't know that to be an Amazon corporate employee, you could work from home, and you got to work from home since COVID, and now you've got to go back in the office. You poor people. There's conversations about the future of work and remote work policies in the entire corporate world. A lot of companies have stepped up to the plate and realized we can't keep doing this. We're losing money. We're losing productivity. And now Amazon has decided that it needs to get its employees back to work. Let's talk about the stock. So what did the stock do? Well, it really didn't do anything. When you look at this on a day-to-day basis, it doesn't tell you the story. The story you need to look at if you really like Amazon, and I do, is the story started last November, when this stock was trading below $125 a share and just rode the up wave. I mean, got in the elevator and hit the top floor, and we ran up to what looks like about $200 a share in July of this year. Then we promptly moved from that $200 move down to $150. This thing took a 25% haircut in about a month. Since then, the hair's been growing. We're back to $186 and change as of today. That's Wednesday, September 18th. I see this going up to around the 230 mark, and I believe there's a possibility of this happening by the end of this year. Now, there's a lot of things that got to play into this, all right? I'm not looking at it seasonally, although seasonally, the Christmas shopping, holiday season comes in, Amazon trucks are rolling. They're rolling in my house every day. Every day is Christmas here. To me, the best thing to do to hedge all the packages that show up in my house is own the stock. That's a great hedge. But I'm telling you where I see the stock going. And as a contrarian who has seen this stock go from 200 to 150, 225, 230 looks like a really good year-end target. It's about a 1-to-1 right now. If you take a look at how much it's gone up off the 150 bottom to where its target is going to be, which is around the 225 area, 230 area to the top side. About a 1-to-1 in terms of range. You might say, Tom, why are you talking about flipping coins with me? I can do that with a quarter myself. Well, because I'm looking at something you're not right now, and that is contrarian analysis. All right, looking at a Fibonacci pullback and what it's done so far. All right, what it's done so far. What else has been in the news other than the Fed cut? Oh boy, exploding pagers. I never thought that those old beepers would make the news again, but apparently they did, targeting Hezbollah members. Injuring thousands of people. I got here killing at least 8. And it had to be a sophisticated operation that they're saying that that Hezbollah uses these to avoid the risks of being found, all right? Because you can't find friends with a pager. You can't find enemies with a pager either, right? The pagers are old technology. So what did someone do? I'm not going to say who because I don't think we really know who yet. There's been some accusations. But what did someone do? Someone took these pagers and rigged them with small explosive devices that could also be remote detonated and put all of this inside the pagers, thousands of these pagers. And then they also did this months ago. So I say that because there is something that could be affected in the market because of this. And I'll save that for give me one more moment, because the other big news announcement was a pipeline explosion that happened in Houston. All right. Fire was still burning. And I thought, wow, between pager attacks in the Middle East and a pipeline explosion in Houston, maybe we should be looking at USO. All right, looking at what's going on in the oil markets. So the oil markets had an interesting day today too. They started on a high note, they ended on a low note. But again, I'm not a short-term guy. All right, I'm not a short-term trader. I'm looking at longer-term charts, and I'm looking at data to help me determine where we're going. You want to know where we're going? If you have not listened to me yet, hear me now. We are in a seasonally bearish pattern, which is a months with an S, months in the making. All right, started in July. The down month started in July when USO was trading at 82.50. We're down in the 70s. We were in the 60s earlier this week. But we're getting a little bit of a rebound. We expected a rebound, but we also expect this this particular area, this segment of the market, to continue lower into the holidays. All right, let's get to the big news, and you know what I'm talking about. I'm talking about that 50 basis point rate cut that happened on Wednesday at precisely 2 p.m. That brings our rates to 4.75% to 5% here in the U.S. Marks the first rate cut since COVID, since 2020. All right. This is due to inflation cooling off. The Fed is shifting its focus from inflation fighting to now they want to maintain a strong job market. That's what the Fed chair was saying. I watched him on Bloomberg take a bunch of stupid questions for about an hour, pretty much answered the same question the same way, not because he's a politician, but because literally the same question was being asked a different way. So, I look at that, and I look at the choppiness. The first thing I looked at was the US dollar. And when I looked at the US dollar, I actually look at UUP. And UUP is really interesting because it ended higher today than lower. Okay? You would think that a 50 basis point rate cut would mean a lower dollar, it would mean a higher bond, and it would mean a higher stock market. Well, that's not what happened. Okay? We had a higher dollar. The dollar ended the day on very close to its highs. Okay? How about the S&P? How about the NASDAQ? How about the Dow Jones? Well, they saw gains, then losses, then gains, then losses, then gains, then losses following the announcement. What am I trying to tell you here? Day traders lose. The Dow chopped a lot. All right, so if you were with me here and you're thinking, and I got my eyes closed right now. So up until 2 o'clock, the Dow, the S&P, and the NASDAQ stayed in a tight but slightly higher range, right? Just to give you an idea, SPY, which is the one that I look at the most, was trading around 561.5 for its low. That clocked in at around noon. Then it hit its high at about 1:30, and that was around 564 and change. So it was really tight. Then we kind of traded back lower, but the minute 2 o'clock came around and the Fed hit breaking news, we saw a range on the S&P that went from about 561.5 or about 560. Yeah, it was about a little more than 561.5, all the way up to 568.5. There was a 7-point move. All right, 7-point range between 2 o'clock and 2:05. That was 70 points in the S&P. That was about, I want to say, probably about a 500-point move in the Dow. That's the range. All right. So pay attention to me here for a moment. The high prior to that was just above 564. Now, a lot of day traders, they like to pull this stunt. They like to buy the high or sell the low. All right, that means that if we get above the high, they'll put a stop in and they'll jump on that high train. Or if we go lower, they'll put a stop in and they'll jump on that low train. Okay, let me tell you how many times we crossed above the high after 2 o'clock. So at 2 o'clock, we jumped above the high immediately. There's no way that anybody got filled right around 564. They probably got filled around 567. You know what happened? S&P came right back down to 563. It crossed back below the high. Then it crossed, and that was in the first 10 minutes. Crossed back above the high before 215. Crossed back below that high again around 240, 245. Then crossed right back above it. Then crossed below it at 3 o'clock. Crossed above it at 315. Crossed below it and back above it before 330, and then back below it again around 335. And then we close near the low of the day. What am I saying here? I don't like day trading, especially with a big news announcement like this. You're just going to hand your money to somebody else, probably a robot. All right. I mean, there were 10 crosses above and below the 130 high from 2 o'clock to 4 o'clock. A lot of volatility. And then we ended up settling near the low of the day. And so anybody that bought that high, they ended up getting stopped out. They didn't get stopped out 10 times. They got stopped out once at the end of the day. And what do you want to bet the market? And there's some people that went and shorted this move at the end of the day. And I'm looking at the futures markets right now, and it's not looking good for them because the futures markets are all back up again. Okay, so day traders lost. What about the weekly? Hey, man, I trade the weeklies, man. All right, you know, you go in and you trade, you went long on Monday. Well, between Monday's open and today's close, you're right back where you started. That's where we are. Monday's open was around 562 on SPY. You know where we closed today? 562.38. So all you saw was a lot of day-to-day volatility. Listen, folks, I got a better idea. I like the 30-day area. I like being in the 30-day. If you're going to be a trader, if you're going to look for, you know, those short-term income strategies, look at the 30-day view. You're not going to get chopped up as much. Okay? And that's my spiel for volatile event-driven news. Well, let's talk about my prediction for AI stocks between now and the election. So I wrote an article this week, and I started off talking about a few months ago. A few months ago, I made a prediction about the future of the biggest AI stocks in the market. And maybe some of you recall, I warned people, holding AI stocks, you could end up broke. Buying and holding. That's hard to say. Buying and holding, you could end up broke. Right? And that's because of patterns. This is the Patterns and Profits podcast. So I want to talk about patterns here too. So this is a very consistent pattern. Now, if you happen to miss that, let me give you a quick recap. Right? In order to do that, I got to talk about really the last time we saw anything this big. And that was the internet boom in the late 1990s. Now, back then, everybody's talking about internet stocks. Well, I had a trading office where we had a lot of folks coming in trading. I remember those days. I remember those days in the trading office. And this was when everybody was talking about internet stocks. Your neighbor, all right? Your dog, if the dog could talk, probably would talk about internet stocks. Pets.com was an internet stock. Oh, gosh. Taxi drivers. Remember those folks? That was before Uber and Lyft. Yeah, taxi drivers. Talk about stocks. Shoe shine boys. Talk about stocks. Even my mother-in-law. She still talks about stocks. But it was an absolute frenzy. Everyone was suddenly an expert on the subject. Everybody had a hot tip. And most of the folks you were hearing this from, the stock market wasn't their primary source of employment. It wasn't their source of income. But everyone was, all they were concerned about was getting that hot stock and becoming millionaires. Now, I got to tell you, people that were just buying and holding stocks, especially up to into the year 2000, when this is when it became it just white hot. The year 2000, coming into the year 2000, I mean, people that bought and hold got crushed. If you don't believe me, if you're not sure, take a look at Cisco, CSCO. That stock was up 19,000% before it plummeted. In fact, it went so low, it hasn't made the high watermark since. If you don't know what high watermark is, that's the all-time high and then a pullback and then back up to a new all-time high. Several stocks we know are doing that even today. Look at the Mag 7. Cisco's not part of the Mag 7. There's a reason why. But that was a historic boom. I remember it. I remember it like it was yesterday. It drove so many stocks higher than anybody thought possible. The numbers, just the sheer numbers, when we looked at things like price to sales ratios and we looked at PE ratios, you couldn't get them. They were just, it didn't make sense, but people didn't care. They wanted to jump on the internet boom. You know, it's funny because back then, most people didn't even have high-speed access. We were all doing dial-up. We were doing dial-up on MindSpring. We were doing dial-up on AOL, CompuServe. That's who I used first, and that was in the early 90s. But this was, like I said, it was a historic boom, and yet most people ended up losing a lot of money during the boom. You know why? I'll tell you why. They could not time the market. Now, back in June, I shared research with you showing AI going through the same pattern. I mean, we were literally laying charts on top of charts. Today's AI charts on top of the decade, the 90s, with the internet. And there were a lot of similarities. Here's the thing, though. I was talking about, when I warned everyone, I warned of the upcoming historic buying panic. Okay, because the buying panic, in my mind, still isn't here yet. And I think that there's a lot of stocks that could see even bigger gains in what I call the last phase of the AI boom. Let's talk about last year for a moment. Last year, we only had 154 IPOs, initial public offerings, and that was on the U.S. stock market, all right? That was about a 15% drop compared to 2022, all right, previous year. Now, think about this for a moment. That's nothing compared to what happened during the internet frenzy, and I'm talking about between 1999 and the year 2000, when more than 600 companies went public. And by the way, most of those who went public had the word internet in their prospectus, okay? And by the way, here's another one for you. Most of those companies going public were not even profitable. We've already seen the initial phase of the AI boom. But here's what I think is going to happen. As we head into 2025, we're going to see similar gains. We're going to see similar patterns. We're going to see similar companies. We're going to see similar IPO spikes with stocks that have no profitability in whatsoever. People are just going to be throwing money at these things like crazy. We're going to see stocks like in 1999, we saw tech stocks that were jumping 1,300 to 2,600% in a single year. Here's the thing, though. This is what I think is going to happen. I think there's a big difference. I think the gains could happen even faster because AI is advancing about 8 times the speed, 8 times faster than the internet did back in the 90s. All right. So I think we're going to see market consolidation through the next decade, but I also think the next phase of AI is going to be huge. It's what analysts are calling it. They're calling it AI 2.0. And this is advancements in artificial intelligence and those advancements and how they're going to be applied to the business markets, okay, to the big business sector. Now, let me take you back to Web 2.0. How many of you listening to this podcast right now remember Web 2.0? You probably don't even know what Web 2.0 was, okay? Now, that was when the internet shifted from the adoption phase, okay, into the application phase. It's basically going from the read-only web, that was the 90s, to when 2.0 came in, and that was after in the let's call it the early mid 2000s, and that's where we went from read-only to interactivity, all right, where we could collaborate, where there was more user-generated content, all right? That was the big difference between Web 1.0 and Web 2.0. Now, what I'm talking about is I'm trying to compare that to AI. We've gone from adoption phase of AI, and we're eventually going to get into 2.0. And 2.0, we're already seeing an impact of 2.0. The initial phases of this are in they're in generated this AI generated art and AI generated media, and what you're seeing in social media with AI. It's actually kind of scary in some cases. But what I'm getting excited about is the explosion of AI applications and how they relate to businesses. You know, for instance, supply chain management, customer relations, and even human resources. And that's why I said earlier, if you don't know how to play this last phase of the AI boom, you could end up losing your money like those folks. And I gave Cisco as one. There were many. Cisco's just the one that I remember, and it's the one that was one of the most popular stocks, even to this day is a popular stock. So if you don't believe me, go grab your laptop, open it up, and get a look at a long-term chart of Cisco. I'm not talking about the last few years. I'm talking about 98, 99, 2000, 2001. Look at those years, and you'll see what I see. And the thing is that I also said months ago that while it's important to know how to lock in these profits in AI, the ones that are that I think are going to happen in the coming months, it's even more important to prepare for the inevitable crash that we expect to see ahead. Now, I'm not the kind of guy to tell you about a problem without offering a solution. And I have a plan. Where have I heard this before? But I really do have a plan, all right, to avoid that upcoming slaughter. And that plan is using my money counter. Now, my money counter alerts me to what's ahead, and it gives me and those that follow money counter a chance to profit quickly and safely, not only through the stock, but through options. So let's fast forward to today, all right? Forget about the 90s, forget about adoption phase of AI. Let's talk about the next 50 days. I mean, we're roughly 50 days away from the 2024 presidential election, right? There's a combination here. There's a combination of the election coming up because the election year is going to be broadly bullish. And there's the seasonal bullishness that returns in the month of October. This is great news for the markets. But when you look at stocks on a case-by-case basis, it's hit or miss. So I asked myself, what type of AI stocks are best to buy or sell before Election Day? And someone had the gall to say, well, I just asked Chat GPT. So you know what? Let's ask Chat GPT. By the way, Chat GPT came out with something relatively new called Trading Assistant. So I had to check this out. All right. And I'm here to tell you it's not a great assistant. Not for me. It's not my favorite assistant. So I asked Chat GPT, what are the best seasonal stocks to buy and sell by election today that have at least a 90% chance of historical probability? All right. I asked that Chat GPT. And so, you know what? Let's ask it again. I'm going to do it right here. Right here. Let's see if we can get this Chat GPT going. What's Chat GPT got to say about this? Let's see. Come on, Chat. Give it to me. Well. Well, I did a cut and paste on this. And I'm not going to let Chat GPT, Chat GPT has audio. Okay, Peter Parker. Didn't that sound like Spider-Man from the latest Avengers? Certainly did to me. Anyway, here's what I got when I asked this. I got a list of 1, 2, 3, 4, 5, 6, 7, 8 stocks that it said are seasonally bullish. Yeah, between now and election day. So you know what I decided to do? I decided to do what I tell all of you to do. Don't take my word for it. Go find out for yourself. Now, I have Money Counter. I can find out exactly what's going on here. So here we go. The first stock up on the list is Walmart. So it says retail and consumer. It looks at Walmart. It's basically saying retail sector stocks, Walmart and Target, benefit from back to school shopping and early holiday promotions. What's that got to do with between now and election day? Well, school did start in August if you're below the Mason-Dixon line, and maybe in September if you're above it. But okay, so they see consumer spending picking up in Q4, and that should make Walmart and Target go up. But you know what? That didn't answer my question. My question is, what stocks have the 90% chance of today, between today and November 5th, which is election day? Let's take a look at Walmart. And Walmart said no. Walmart is not a stock that goes up between now and election day. I mean, it characterly it is, but it's not 90%. So Chat GPT got that one wrong. Because when I look at WMT is not a money counter 90% stock, and it doesn't even have a pattern today. It doesn't have a pattern for another week, and that pattern is not 90%. How about Target, TGT? All right, TGT. I'm punching that one in right now. Whoa, God! Talk about missing the mark. Oh yeah. Target has a pattern going down, not up, down 70 to 80% over the next 15 days. So Chat GPT, you didn't get that one right. And by the way, that and Chat GPT pulled that information from Morningstar, because that's what Chat GPT does, folks. It's pulling data from different parts of the internet. It's scraping data from analysts who don't have what I have. All right. Let's continue. The next one I see is Apple. So it's saying Apple has a pattern. What is Apple? What's it saying about Apple? Gains due to the new launch products like iPhones in September, performs historically well in the months leading up to holiday sales. Okay, but it's not telling me what's good between now and election day that has a 90% chance or better of success. There's nothing on here for Apple that has 90% chance of success. Well, if you want a pattern today, it goes down. Next week, it has patterns that go up, but not 90%. Okay, well, we put that one in the loser camp too. So I'm right now I'm 3-0, or I'm 0 for 3. 0 for 3, not 3-0. 0 for 3. Microsoft often sees rises in Q4 due to its strong cloud business and demand for software and enterprise products. That's what ChatGPT told me. But you know what? When I go into MSFT and I look at a 90% pattern starts today and moves forward, nope, doesn't have it. No dice. 0 for 4, ChatGPT. Let's continue. Oh, by the way, got that data from CSI Market. Dun dun. Isn't that CSI? Dun dun. Crime scene. What is it getting from crime scene for? It also says healthcare stocks like United Healthcare, that's UNH, perform well during election years due to healthcare policy. Okay, let's see what UNH says. Well, if well is 70%, well, then, I would agree with you. But no, I asked for stocks that had 90% or better chance of success between today and election day, and it missed that mark too. That is 0 for 5, Chat GPT. What else do you got for me? Oh, and it found that it's something called stock analysis, whatever that is. Energy stocks. So it says that Exxon and Chevron continue, they should tend to perform well in the months leading up to colder weather. Now, I already know the answer to that one, and that's a big goose egg because we know that that the seasonality doesn't start until February. But let's check the money calendar just to be sure. So, XOM. Let's take a look at that one. Oh, that's just sad. First of all, there are no patterns that go all the way out to election day that have neither bullishness or bearishness that are even 70% accurate. But if you want a pattern, the next few days, there's about a 70 to 80% chance of it, the market moving lower. And then after that, there's a 70% chance it's going to move higher. But that's both lower and higher within the next 2 weeks. And I don't trade short-term stuff. So sorry, Chat GPT, but you are wrong again. How about, let's see, how about CVH? Chevron? CVX, sorry. CVX, not CVS, CVX, Chevron. Same thing. Same thing. It's got some, 70% chance it's going to go down the rest of this week. Then after that, about 70% chance it might go up. First of all, it's not 90. I'm not taking a look at it. And so there we go. I don't like this. Sorry, Chat GPT, but you're not helping me out here. Defense stocks, Lockheed Martin and Northrop Grumman. Defense contractors often benefit from election year spending discussions, especially when national security is a key issue. Okay, let's check and see how this has done in what we see it doing heading up between, and we weren't talking about election year, but we were talking about every year between now and November 5th, which is election day. LMT, that's the first one. LMT, nope, that is terrible looking. It has a couple of patterns down and a couple of patterns up, and nothing's 90%, and nothing's goes out to election day at all. That's LMT. How about NOC? NOC, N-O-C, Northrop Grumman, same thing. A lot of red and a little splashes of red and green. Looks like a Jackson Pollock painting when I'm looking at this particular pattern. So guess what, folks? Chat GPT was a big goose egg looking at all of this data. All right. You know why? Because ChatGPT might be good for broad-based analysis and consolidating news. But you know what? It becomes a problem when you want true specifics, when you want true rules, when you want to put rules-based information in, because it won't do that. Especially, I mean, it'll scrape data, but what's it scraping it from? It's scraping it from it's scraping it from news organizations. It's scraping it from social media. I mean, it might be good for sentiment-based, when you're getting opinion-based from everybody out there, which most of them don't have any skin in the game. But here's the real problem. It doesn't have what my money calendar has. It doesn't have my proprietary system that I almost patented. And in the end, I decided to pull the plug on the patent because when you patent something, you publish it. It's out there for everybody to see. So I didn't want that because, all that patent does is it allows everybody, it basically says, ha ha, I have this and you don't. And you can only imagine how many people could get their hands on something like that and have my code. So not going to happen. And because they don't have my code, they don't have my rules, ChatGPT can't give me or you exactly what we want in order to make that educated trade in stocks and especially in options. So, bet you're wondering what's good between now and election day. I'm going to give you one. And it's actually an easy one because it was really easy for me to find this because I have the money calendar. And this popped up and it looks pretty good. And the stock that I'm talking about that hits that 90% between now and election day is NVIDIA. You know why? Because in 2014, NVIDIA went up between now and election day. It also did it, and I'm talking about the first week of November. Between now and November 4th, NVIDIA went up in 2014 and 2015. It went up 22% in 2015 during that pattern. 2016, 2017, 2019, 2020, 2021, 22, 23. The only time NVIDIA didn't go up during this pattern was 2018. Right? 2018. And so when you go back and you look at the election years, and the election years were the two election years I see are 2020. That was an election. Let's see, 2023, 210. So 2019 was an election. Was the year that we had that. Or so excuse me, 2020 was the election year. That was an up year. 2016 was an election year. That was an up year too. All right. But 9 in the last 10 years, NVIDIA moved higher. Also, when I draw a regression line, okay, a regression line is like a trend line. Most people draw regression lines of stock prices. I draw them on percentage moves on my patterns. And they got to be moving up. If I'm going to take something, it's been moving up. It has a rising line. That's what I like to call my power meter. Okay. So what's it been doing? How about a better than 11% average return between, let's call it now, and the day before election, November 4th. All right. November 4th. Election day is November 5th. So we're looking at a pattern on a stock that goes up before we even go to the polls, for those of you that wait until the first Tuesday of November. So you now have one. All right. So we talked about this week's news. What have you learned? News is news. I don't like trading short-term stuff. I'm not a day trader. I like the 30-day, that 30 days or greater. That's my sandbox. All right. We talked about where we were between now and the election day. We talked about Chat GPT and the fact that, it worries me that people are going to start thinking Chat GPT is going to be what they need to time the stock market, and it's not. Chat GPT just puts more noise into your eyes, and if you use the speakers, it'll put more noise into your ears, and therefore it might make you even have more analysis paralysis. And finally, Chat GPT, it doesn't give me the specifics that I need when I've got something that I'm using that everyone else doesn't. All right. So it is my job to educate you on patterns. It is my job to educate you on what to do with those patterns and finding alternative trades if such pattern exists. And it's also my job to show you how to plan, execute, and manage those patterns. And that's what I'm going to do. And that's what I'm going to continue to do. That's what I have been doing. That's what I'll do. That's what I'll continue to do as we move beyond yet another election.